Most people think buying a car is about finding a good price. It's not. The scam is rarely the sticker. It's everything that happens after the sticker. And if nobody walks you through it first, you won't see it coming until it's too late. If you're new here, I'm Stickman Dad. I go over the stuff someone probably should have sat you down and explained a long time ago, but never did. If that sounds like your kind of thing, go ahead and hit subscribe now. There's a lot more of this coming. Here's what this video is actually about: buying your first car without getting taken. Not the generic do your research advice you've already heard. I want to show you exactly where the money disappears because it happens in 4 specific places: the ad, the financing, the paperwork, and the car itself. By the end, you'll know more about this process than most people who've done it 3 times. The last one, by the way, is the one almost nobody checks, and it could be the most dangerous thing in the whole deal. Let's start with the ad, because that's where the trap gets set before you even walk in the door. You see a price online, it looks reasonable. You call, they confirm it. You drive over, and somehow the number isn't the number anymore. There are required fees, a protection package that was already added, a doc fee, an advertising fee, a dealer prep fee. Suddenly, the car listed at $24,000 is $27,500 before you've even sat down. This isn't an accident, it's a system. Most people know to ask for the out-the-door price. Good, but not quite enough. The sharper move is to ask for a written buyer's order, every line item itemized before you go, not once you're there. The FTC has actually warned dealers that advertised prices should include fees consumers are required to pay. So if fees appear that were never mentioned, you're not confused. You're being played. And here's something a lot of people assume is already handled. The government tried to fix this. The FTC created the CARS rule, combating auto retail scams, meant to stop bait and switch tactics and hidden fees, requiring dealers to show the real total price up front. The Fifth Circuit vacated it before it ever took effect, finding the FTC hadn't followed its own rulemaking procedures. The rule is not in effect, and the FTC would have to restart the entire process to bring it back. So don't assume you're protected here. Right now, you're on your own, which means knowing what to look for is the only real protection you have. That brings us to place number 2, the financing. Most people think the hard part is negotiating price with the salesperson, but there are actually 2 sales floors at a dealership: the lot and the finance office. That's where the real money moves. When you finance through a dealership, they don't just find you a loan. A bank might approve you at 7%, and the dealer shows you 9%, marking up the rate and pocketing that gap as profit, with no obligation to tell you it happened. The fix most people skip: get pre-approved at your own bank or credit union first. Walk in with your own number, and if the dealer beats it, great. If not, you're not at their mercy. But even with your own financing locked in, the finance office still has tools: gap insurance, service contracts, tire and paint protection, key replacement, anti-theft etching. The FTC classifies these as optional add-ons, but in the room, they rarely feel optional. Sometimes a dealer will say you need an add-on to get approved. That's a red flag. The FTC has challenged dealers for telling buyers add-ons were required for financing when they weren't. Ask them to show you that in writing. You won't always get an answer, but the question alone shifts the dynamic. One more thing almost nobody mentions: if you cancel an add-on later, the refund often doesn't come back to you directly. If it was financed into your loan, it typically reduces your loan balance instead, not your monthly payment. The CFPB has flagged real problems with servicers failing to properly issue these refunds. Canceling doesn't automatically lower what you pay each month. It's a very different thing than people assume. Now, place number 3, the paperwork. This is where yo-yo financing lives, and it's one of the more stressful things a first-time buyer can hit. Spot delivery is when a dealer lets you take the car before financing is actually finalized. You drive home feeling great, then a few days later they call, say the loan fell through, and now want you back to sign at a higher rate or put more down. Before you leave any dealership, ask one question: is this financing final or conditional? That question alone can save you an ugly phone call later. If you have a trade-in, this gets worse. If your old car's already been processed or sold and the new financing falls apart, you've lost your leverage. You need the new deal to work because your old car is already gone. That's not a negotiation, that's a trap. Last paperwork item, the buyer's guide on a used car isn't a formality. It tells you whether you're buying as is or with a warranty. And in some states, an as-is buyer's guide can legally eliminate implied warranties entirely. Don't just ask if there's a warranty. Ask to see the buyer's guide and photograph it before you sign anything. All right, place number 4, the car itself, the one almost nobody checks. Most people pull a Carfax, see it's clean, and feel good. Here's the thing, a clean Carfax is a clue, not a verdict. If the car was repaired privately, paid for in cash, or fixed by a shop that doesn't report data, none of that ever shows up. The report can look spotless while the real history is something you know nothing about. What actually matters more, and what almost every first-time buyer skips entirely, is open recalls. Take the VIN and run it through NHTSA's free recall lookup at nhtsa.gov/recalls. Recall repairs are handled through the manufacturer's dealer network for free. A car can drive perfectly and still be sitting on a dangerous, unrepaired recall. And the most dangerous recall issue may be completely invisible. More than 5 million cars on the road still have defective Takata airbags despite a recall that's over a decade old. Roughly 67 million of these airbags have been recalled because they can explode on deployment, sending shrapnel into the vehicle. New recalls for older models were still being announced in 2024 and 2025, and automakers are still chasing down affected cars in 2026. The most dangerous part of a used car might not be the engine. It might be the airbag you hope you never have to use. If you're looking at a 2000 to 2018 model year vehicle, check the VIN number with NHTSA to confirm the repair's actually been done. It takes about 30 seconds and it's free. Now back to the thing I planted at the start, the one that quietly costs people the most, and almost nobody talks about it correctly, the monthly payment. When a dealer asks, "What payment are you comfortable with?" that's not a helpful question, that's a setup. A monthly payment can be manipulated 3 ways at once: interest rate, loan term, and down payment. 2 cars with the exact same monthly payment can be wildly different deals. $450 a month for 48 months is not the same as $450 a month for 84 months. One's a car loan, the other's a financial trap with wheels, because you're paying interest long after the car's lost most of its value. And the biggest first car mistake of all, buying at your approval limit. Just because a bank approves you for a number doesn't mean the car is actually affordable. That number doesn't account for insurance, repairs, registration, tires, or a deductible if something goes wrong. Your approval number isn't your budget. It's the maximum someone else is willing to let you risk. So here's where we land. The scam happens in 4 places. The ad, where fees appear after you've already committed. The financing, where your rate gets marked up and add-ons get packed in. The paperwork, where yo-yo financing and as-is clauses can catch you off guard. And the car itself, where a clean history report can hide a genuinely dangerous open recall. You came in knowing to ask for the out-the-door price. You're leaving knowing to get a written buyer's order before you go. Get pre-approved before you walk in. Ask whether financing is final before you drive off, and run the VIN through NHTSA before you sign anything. That's a completely different level of protection. If this helped, drop a comment with the one thing that surprised you most. I'm genuinely curious which part lands hardest. And if you know someone about to buy their first car, send them this. It might save them a few $1,000s and a lot of stress.